Welcome to The Mortgage Voice with Jeff Barton, your voice in the mortgage industry. Each week on this program, Jeff and his guests share their expertise, personal anecdotes, and the latest industry news to keep you in the loop. Now, to provide you with insight and help you navigate the consistently changing world of real estate lending, here is your host for The Mortgage Voice, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. 888-713-2929 is our telephone number. Pick up the phone if you want. Give us a call. We try to talk to you about what's going on in the mortgage market as well as in the real estate market in San Bernardino and Riverside counties, as well as up in the Tahoe area. We reach LA and a bunch of cities in Orange County as well. So if you're hearing the show outside of what I said was our original and main focus here, it's because we bleed into many different places with our signal, and that brings us a greater, wider audience. We have many people who listen to the show looking for answers about real estate, their questions, mortgage rates, and by the way, Daryl, have you seen what's going on with mortgage rates lately?
It's been wacky.
Yeah, you know what?
It was going to go up, and
now it's not
going up.
Not only is it not going, let me get that piece of paper out, because I think the most important thing on the top of this show is to talk about the opportunities with the rates being so low. So maybe a year ago, a little more than a year ago, we were talking about, we're going to have rates above 4%. Well, that happened. Well, a year later, or a little bit more than a year later, rates have fallen below 4% again. And I'll be the darndest person because I can't really figure it out. Can you?
Well, everybody we talked to near the end of last year, beginning of this year, predicted rates were going to go up this year. It was just destined to happen.
Right.
You know, water rises to its level and...
Yeah, the supply demand, a lot of this stuff has to do with things beyond most people's understanding. We do try to talk about it on the show, why it is the way it is. But specifically, 30-year fixed rate loans average across the U.S. today, 3.875. That is a big drop. If you bought a home last year at this time, you can expect to save $200-300 a month if you refied. And by the way, if that's an option for you, I would recommend it. The payback on that is probably minimal, maybe a year. But after that, you're going to be saving that $200-300 a month on your mortgage payment, and that would be for the next 30 years on a conventional 30-year fixed rate loan. So that's a very good saving. Now, if you're 7-8 years into a loan, well, I don't know. I don't know if you're ever going to recap all that interest you've already paid, but it is a consideration if you're looking to take money out, if you're cash out refi, or if you're looking for some other relief from, let's say, debts on your credit cards, or maybe you want to pay off the student loan. Taking money out of your house is a good idea. And by the way, this rate, I think it's going to go lower. The FHA VA rates, 3.75%. Now, I'm not kidding. This was maybe 15 months ago when we were all talking, Jerome Powell, and we were talking that what the Fed was going to do and that the economy was boiling. At that time, now we talked about it last week on the show, President Trump began to berate Jerome Powell publicly. Now, we flash, whatever it is. We come forward a year and how many months, and we have exactly the scenario that the president wanted. We have lower interest rates again, and we have a Fed talking about cutting rates. Where is it? Here, it's in here somewhere. The vice chair of, everybody knows Jerome Powell's name. And you know what? A couple of years ago, I don't know when this happened, there were 9 Fed governors, right, that represent the 9 federal zones in the U.S. They began to all speak out more, all began to get a name. We know that there's Philadelphia and Chicago. Well, this guy, the vice chair, named Richard Clarida, okay? Richard Clarida, he is the Fed chair, I believe. Let's see, well, it doesn't even matter where he's from, but he talks about, he's the vice chair, right? So it's him and Powell side by side dictating or trying to understand what to do and then obviously telling the rest of us what they're going to do. He said basically that the Fed is ready, willing, and able to be able to cut rates if the economy falters. He said the economy is doing great right now. I mean, everything seems to be moving along well. Everything in the housing market, everything in the economy, wages, employment, all these things, inflation, they're all under control, or at least rosy, and I happen to agree with that. But he said, if the economy falters, we're ready to step in. So that tells you right there that they're thinking about it because they're not sure if the economy is going to sustain itself. And that's important to know because right now we're entering election season, right? And everybody's nervous always during election season, especially the markets. I read, interesting. So the bond market, what is the bond market? It's selling U.S. Treasuries, right? How does that affect the mortgage rates? Well, usually what happens when the demand for Treasuries is high, the mortgage rates go down. And what they call that is a rally, right? A rally in the bond market simply means that a lot of people want to buy Treasuries. Now, why is there a rally in the bond market? Because people are nervous about this trade war with China. A lot of people who buy and sell at Walmart or at Target, or a lot of other discount stores nationwide are realizing that the cost of goods coming in from China, and there's a list, you can go online and find it, and it strikes almost every industry and every consumer good that is out there. Most products are made in China now, at least the ones that I want to buy. Now, I'm not buying, high-end expensive things. That's a totally different market. But if you're just living day to day, paycheck to paycheck, like most Americans are, you're shopping discount because that's what you can afford. And those products are primarily made in China. So if the proposed tax on imported goods from China, the tariffs, another round of them, I think it's $200 billion worth, it's going to affect you and your pocketbook. Let's say you're buying Nikes, right? Nice pair of Nikes, you're paying $80, $90 for them, right? And that's a nice shoe. That's not a discount shoe at Payless or something else, right? That's a nice shoe. You're going to end up paying 25 to 30% more for that shoe. So it's going to cost you $100, $110 for that same pair of Nikes that you bought for $80 or $89 or whatever it is that I said. Now, are you going to think twice about buying that product? Of course you are. Why? Because, hey, it's different when you're paying $130 for a pair of sneakers rather than $80. It just is, psychologically and actually financially. So what I'm saying is that the nervousness in the market about what's happening in the trade war that seems to have no rhyme nor reason nor end in sight. And by the way, did you see that they found the North Korean negotiator for the nuclear deal? They were trying to work with North Korea and Trump.
When you say found,
well, there was this rumor, and this always strikes me as I'm one to have to believe a lot of what's on television in the news, CNN or Fox News or whatever it is. I think most of it is probably accurate, maybe with a political slant. But when you find out that CNN, among other news outlets, was reporting that this guy who was the head negotiator for Kim Jong-un for the North Koreans during the nuclear talks with President Trump was killed, was murdered, was assassinated. But he wasn't.
Rubbed out.
But yeah, right. But he wasn't. The fact is that the guy shows up on TV 2 days ago. Now, how does that make the U.S. media look? And how does that,
like idiots,
like complete idiots, once again following the nose of what brings viewers in, and what somehow is linked to the president. It doesn't even matter if it had anything to do with him. As long as you say Trump in any report, you get clicks or you get watches or eyeballs or whatever it is. It's just, to me, it's the worst thing when an unresearched or uncorroborated story gets put out as news. And I think that's part and parcel to what we're saying here about what's going on with the trade issue with China. We don't know how that's going to affect anything but prices. But yet the bond market rallies, i.e. the demand for treasuries, because people got out of the stock market and started putting their money into treasuries. That's what happened. But that's why rates are so low. So if you're out there, think about looking at the macro of it, but take advantage of the low rates. 3.875 30-year fixed rate mortgage is a smoking deal, right? So, like I say, there's many good things that are happening in the economy. One of them is the rates are low. So if you're out there and you're listening, thank you for listening. Thanks for tuning in this week. I'm Jeff Barton, your voice in the mortgage industry. We'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. The telephone number here is 888-713-2929. We are on each and every week. Please give us a call. We can help you answer questions that you might have about the volatility both in the stock market as well as real estate prices. As you know, we're in very close to the summer season in buying. A lot of people will be out of school looking for the next move, looking for someplace to go, looking for the best possible deal. San Bernardino, Riverside, Los Angeles counties. I want to say hi to all my great listeners out there. Once again, thank you for tuning into the show. Bringing once again to the show some update from those areas is Connie Hernandez, loan officer, real estate broker. Connie, how are you?
Fine, Jeff. How are you?
You know, I'm pretty good, thank you. Although off air talking about why rates do what they do, because in an earlier segment in the show, I was talking about how spectacular the rates were, about averaging 3.75% on a 30-year fixed. What are they doing now?
Well, I guess I could probably let you know in a little bit, because I just got notified that there's going to be some changes, and it's not going to be for the better.
I see. Well, I mean, how much could they go up? An eighth, quarter, maybe?
I'm hoping no more than that.
Yeah. Well, how could it? I mean, unless this trade war with China has got everybody nervous. I know there's a lot of people that took money out of the stock market and put it into treasuries, but I don't know.
That could definitely be a major factor as to why we'll see maybe rates increase a bit. Obviously, you know, if money's taken out of the stock market, that's going to hurt us.
Yeah, but if they put them into treasuries, I thought that was the indicator, right? The 10-year note.
Well, that's true.
Yeah, we don't know. I don't know. You know what?
Like I mentioned a few minutes ago, it's like, you know, we used to kind of have to look at the stock market, and we could gauge where we were going, and we had a pretty, you know, clear direction if we listened to the news. But these days, it's just it's very unclear. It's
very unclear. And as I was also saying earlier, is that we get so much attack on the media, it's very difficult to listen to one station versus another and get a well-rounded view of what's happening. It's almost as if you have to do research on the news you just heard to make sure that what you're hearing is correct. It's very difficult, especially for a consumer out there. All right, that aside, tell us some good news about what's happening in your area.
Well, the good news is, you know, summer's here and everybody's ready to make changes. You know, there's still a lot of inventory out there, and believe it or not, there's still a little bit of competition. I do work with a lot of real estate agents that have mentioned to me their properties. You know, they're still receiving multiple offers. So
Great.
That's a good thing, right?
For the seller, it is. Sure, it is. And do you find
as long as these rates, you know, hold still, I think we should have a good summer.
Yeah, I thought that we had, and I read an article, although, again, last week to this week, right? Last week I was looking at articles that said, you know, we have a market that is really steady. We don't see the type of increases that we were seeing. Today I look online, and of course there's an article about how, you know, the margin has increased in terms of sellers and what they can expect from selling their house, i.e., instead of 1% to 2% year over year, they're looking at 5% to 6%. And I was like, well, make up your mind.
Oh, that doesn't even make sense.
No, it doesn't make it. Week to week, it doesn't make any sense at all, unless you're just looking at May numbers or April numbers. So in your area, and again, to explain to the audience where you work and the areas that you get your business, please.
Our office is in downtown Covina, and we've been here for quite some time, over 10 years in this location and another 5 in just a couple of stories or a couple of buildings down the street. But been in the business for, I almost hate to say, over 20 years. But our area's, it's really a great area to purchase. You know, of course, the Inland Empire is busy because it just has more affordable homes.
Right.
I just met with a couple yesterday, and they both work in the Downey area, which, you know, it's still a little bit of a drive to go to Corona or Fontana
or
Ontario. but they're willing to make that drive because they get more home. And, they're willing to work around their schedules because, again, they get more home for their dollar.
Now, when you counsel people, when you're looking for a loan, do you start out first by, what they make, their credit score? You look at them as a borrower, or do you look at what their wants and desires are for the home? Which do you look at first? I guess as a loan officer, one has a little bit more weight than another.
Well, I think to be a good loan officer, you have to have a really good ear. You have to learn how to listen. And you have to start off the conversation as to, what their expectations are. Sometimes their expectations are right on the money and sometimes they're not. So sometimes we're bearers of good news and sometimes we're bearers of bad news.
Right.
So the thing is that the main thing we have to look at is pricing is based on FICO.
Mm-hmm.
So if they have strong credit, then the rest can be fairly easy. If their credit is a bit challenging, we always have the FHA loans that are available. But by the same token, everyone's trying to get the best loans possible with the best interest rates possible. So, again, we focus on the credit and their income first, and then we start seeing, what their expectations are as far as what their budgets look like.
Do you think
it's really
that
important to talk about the budgets?
Oh, absolutely. I'm sorry to interrupt you. I was wondering if the hybrid loan, that non-QM loan, or the conventional 30-year or FHA, where do you see most people landing when they're looking to get a loan?
Well, the challenge that we have in the Inland Empire, and, I service from the San Gabriel Valley to the Inland Empire, so LA County is not a challenge at all. Orange County is not a challenge at all because we have those high limits.
Right.
So once you get into the Inland Empire, you have some really desirable areas like your Upland, Rancho Cucamonga, where the prices of homes are $600,000-$700,000.
Yep.
And these are second home buyers, and they want their dream home, and there just aren't programs for them unless they have extremely high FICO scores and a 10% down payment, where we can do a first and a second and get them into an 80% loan, or be creative and get them into a conforming loan amount with a good-sized second. I mean, those are the only options for those people, again, if they don't have the huge pockets.
Yeah, and explain the limits to people who don't necessarily know the difference between each county and how that the limits on what they call either conforming or the FHA limits. How does that work? And maybe explain the difference between the different counties.
Well, now you're going to catch me off guard here, but
Okay.
that's okay.
I threw you a curveball. That's good.
So I'll give you a general idea. So the limits, so I'm not pinpointing the specific number, but
Okay.
LA County has very high loan limits for FHA, you're in the 600s in LA County. In the Inland Empire, you're going to be in the 500s. So when you don't meet that loan limit, there is like a 5% down payment, for example.
Mm-hmm.
You have a limit as to what the maximum loan amount the lender will give you. So if you're in the Inland Empire trying to get your dream home and you don't quite fit that limit, then you're going to have to look at non-QM loans or other loan options. And in many times, you're going to have to reconsider the down payment. So basically that, in a general aspect, it's what it is. LA County allows you for a higher loan limit in order to give you a conforming loan amount. Now, conforming loan amount also gives you better interest rates.
Right.
Once you go and exceed that, now you're going to be dealing with higher interest rates.
Yeah, no, that's a great explanation, because I think a lot of people don't realize that it's not uniform throughout, a general area. Like if you say Southern California, you could have different loan limits from FHA or from conventional over the 4 or 5 counties that you're talking about.
Yes, they all vary, so I would definitely do a little bit of research as far as, what your abilities are and what your expectations are for those areas you're hoping to buy in.
Right. Okay, we got about a minute left. Give us your prognostication of where you see the market heading in the next 3 or 4 months during the summer.
3-4 months, well, summers are busy, so that's a good thing, and, we're expecting that the rates will hold.
Okay.
And if the rates hold and if they don't drive the prices of the homes, I think we're going to have a great summer.
I agree with you 100%. And by the way, I hope you personally have a great summer and all your family's well and you take a nice vacation too.
Thank you so much. I appreciate being on the show, Jeff.
Thank you very much. That's Connie Hernandez, great loan officer and broker. Oh, Connie, shout out your phone number, will you?
I can be reached at area code 626-918-2419 or my direct number, 626-422-2017. Thank you, Jeff.
Thank you very much. And I'm Jeff Barton, your voice in the mortgage industry. We'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry, 888-713-2929. That's our telephone number. If you pick up the phone, give us a call. We can help you with some of the questions you've got to have right now because rates are kind of up and down a little bit in the last few days. They were really low, and now it seems like they're going to go back up. We had an update on a previous segment in the show as to exactly what was happening exactly right now. Hopefully the volatility will not be there all summer. I think that if we can have something hovering around 4 to 4.25%, we're in pretty good shape. We talked about the economy. We talked about the trade war that we're currently having, and we may have a bit more of, and how that's going to affect prices of goods, and also how that's sent money from the stock market to the treasuries, which probably is why we had a little downtick in the mortgage interest rates over the last couple of days. But as I said, we are now looking at some higher rates, although albeit not huge high rates, but a little bit, maybe an eighth, maybe a quarter. Anyway, I bring to the show another great guest that has been on the show several times, and she has great experience as both a real estate broker and as a loan officer. And I wanted to get, this is Livier Becerra, and I really appreciate you coming on.
Hi, Jeff.
Hi.
Thanks for having me.
You're welcome. Do you like that very formal intro? Sorry, I always freeze up when I try to introduce people because I never want to, say the wrong thing.
No, thanks for making me feel important anyway.
No,
yeah.
I think you are. I think the basis by which you build your business is different for each and every person in the business. Let's get to that question. How is it that you're doing right now? How is the business, and how do you maintain, getting more business in the way that you do?
Well, I've been doing this for almost 20 years, so a lot of that is in my database. So,
right.
But I do get an immense amount of referrals, and I work with realtors. So that's where most of my business goes, and I have a big family.
Oh, that always helps.
Yeah.
Friends, family, friends of family, family of friends, all that really helps
Yes, exactly.
in the business. So we've got an interesting market. What's happening in your real estate world?
Well, it's officially a buyer's market, so
Right.
Sellers had it for a very, very long time. And
Right.
It doesn't mean that, California still, there's a lot of demand still to live here. So I don't know that I would expect it to stay that way for a while now that the rates dropped. So,
Right.
And, it could have gone back to a buyer's market because of the rates have gone up quite a bit. I mean,
Right.
probably a point at least.
Right.
And that's a big difference in a mortgage for someone to qualify or not. So it was a market adjustment, I think the home sales, the prices were outpacing buyers' incomes. So anyways, hopefully, I think it's just stabilizing myself, my opinion.
Okay. And in your world, when you're looking at borrowers for these houses, or you're looking at, you're being a seller, a listing agent as well, you're reviewing the information that they give you in order to make sure that the agent, you representing the seller, can rest assured that they are qualified. What kind of income are you looking for? What kind of loan product makes you the happiest when you're as a listing agent?
The happiest, obviously, is high credit scores and lots of money down.
Right.
That's not always the case. And it all depends. You'll get a seller who's military, and they'll get a VA buyer and say, give it to that guy.
Right.
It just depends. You can always put in your input to the sellers, and these are the ones that I would recommend. They have good scores and lots of money down, and sometimes like I have listings now, and I just put up a listing. I want to say just last week, and probably had 30 people coming through in an open house on Saturday, and I have already 5, 6 offers and counting right now.
Wow, that's pretty good. In less than a week?
I'm sorry? Yeah, less than a week.
In less than a week. Well, that says a lot about what kind of market it is. If there's that kind of demand, probably because the rates went down a little bit.
I think so too.
And it always makes sellers happy. Buyers are mad, and you probably represent some buyers too. How do buyers handle that when you tell them, "Hey, I just submitted your offer. We're number 27 in line."
I know. Well, the key is to build a relationship with that listing agent and
right.
just say, what I like to do when I submit an offer, I put a picture of my clients with their kids and the dog, and I have them write a nice bio because really, when you look at offers, they're just words on paper. But if then you see, this is a family, and it just makes it more personable. It seemed to help me. So.
Well, I always think that's a good idea, and I tell agents who ask me that come to work at the company, and I say, look, you got to personalize this. Either you with the agent or your clients with the seller, and probably a little bit of both would help. Humanize the element. It's not just numbers. I mean, some of the sellers don't care, but some do.
Yes, they do.
Yeah,
they absolutely do.
Yeah, I always think that somebody with a young family looking to start out, and if the seller is somebody old looking to scale down, that absolutely means something to them, because obviously those people that are selling raised a family at that house. So they're thinking maybe this is a better way to go than try to just get the most money. And usually it's, you throw a blanket over the offers, right? It's between $2,000 and $3,000, most of them.
Right. It's true. Absolutely. And, a lot of times where if you do go to an open house and a seller is there and buyers get to meet, the sellers and they talk and they, build a rapport right there. And that's, a lot of times that's when it happens. Okay, we want that family to have it. So it isn't always about money, like you said, but it helps to personalize with the agent because the agent does have an influence on them as well. So.
Do you worry that if sellers are hanging out during open houses or are there during showings that there's a potential for some, seller talking too much, I guess is the best way to put it?
Well, some cases where this is happening, where sellers are there, is when they don't want a lockbox on the property.
Right. Of course.
So when an agent wants to show that property, as a listing agent, I can't keep going over there. So they will have to allow them to come in. So that's when they have the opportunity to talk to everyone.
Yeah, I as an agent, I always worry because I never know what the seller is going to say, and I never know what they agree on or talk about during that time. So
true.
Because you and I both know who's liable for all of this, you and me, not the buyer and the seller. Right. So, to get caught in the middle of any of this stuff, I always, and the reason I ask is because, some obviously, most buyers think they're smarter or at least as smart as the agent representing them. So they like to be able to be in control of the negotiation process. How do you handle that?
Actually, I tell the listing agent not to talk to my seller.
Exactly,
and,
right.
That goes against, ethics for them to do that. So
of course.
They're not supposed to. And that doesn't mean that it doesn't happen, but they're not. And I also tell my sellers, do not give them, if you want the most for your home, if they just ask you where's the bathroom or the master, that's all you need to tell them.
Right.
Anything else is, this is a sale, it's business.
Right.
So,
and I agree.
Just be a little strict there.
No, I agree. And I think the control of the transaction begins with the showing, right? The first showing, somebody walks in the door, you want to make sure that the house speaks for itself. And if there are any questions, you obviously want to talk to the professional in order to get the proper answer.
Right, which is great. Again, the best reason to have a lockbox. But again, there are some sellers who, they don't trust people to go into their home, so they prefer someone be there at all times. Of course.
And that is a bleed from the west side of Los Angeles, where it's been that way for decades. And we used to love listing in the valley or out in the Inland Empire because you didn't have to deal with that nonsense. Well, now, of course, with the property values, what they are, most of that is, people wanting to protect their home, like you say, and make sure that they get full personal service, which, again, is, I think it's good. It's just time consuming.
Right.
So I have about 30 seconds left. Can you shout out your phone number and the best way to get in touch with you for people who are looking for a terrific agent in that area?
Sure. My name's Lavere Becerra, but you can call me Liv, like live here. My phone number is area code 626-712-9920. There's a library of loans that we deal with, one for everybody, if it's FHA, if it's I-10, if you're a business owner with too many write-offs. There's a loan for everybody. So, and there's actually a good options for investors as well. So give me a call.
Lavere, thank you very much for coming on the show once again, giving us terrific information.
Thank you, Jeff. Glad to be here.
Okay, bye. I'm Jeff Barton,
bye-bye.
your voice in the mortgage industry. We'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. 888-713-2929, our telephone number. Pick up the phone, give us a call. Let us know what you need in terms of information. There's certainly enough choices in the mortgage marketplace right now that if you have a job and you've got some reasonable and good FICO scores, you certainly can obtain a loan. And if you own your own business and you don't show a lot on your personal taxes, but you're running a lot of income through your business, there are loans that you can do for that. The products out there are really tremendous. So whatever you're looking for, give us a call. Give this guy a call. My next guest, Luke Mankey, who is a loan officer, a terrific guy. Luke, how are you?
I'm good, Jeff. Thanks for having me back on.
And thank you very much. So I'm pitching products here. Give us an idea of what's out there in the marketplace, just a smattering of some of the new and maybe some different products that might not be readily knowable right now by the consumer.
You just touched on a couple of them with just having either good deposits or, self-employed. There were no options for self-employed borrowers, or very limited options for a handful of years there during the recession, and even a couple, 3 or 4 years out of it. It was so limited, and now it's just wide open, and it makes sense. Like, if you're strong and seeing a lot of deposits through the business, we can use those bank statements, or if you got a bunch of equity in the house, we can use that. Do cross-collateral stuff. I've even got some good jumbo products for clients that, I had somebody that had to take a year off in 17, but their 18 taxes were strong. So we just went 1 year income doc on a true jumbo, which is difficult to do. And the rate's only like 0.75% to 1% higher than your top shelf jumbo loan is as well. So
wow.
It's a good time. Values are up, equities are up. People are buying. There's not a lot of it. It's a good market right now.
Now, the strength you have in the marketplace with the programs and everything else really comes down to being able to explain it, right? Being able to take a client through the different scenarios and loan programs. I think that's one of your personal strengths. Give us an idea of how that works when you're talking with a client who doesn't quite know whether they should be going, one program versus another.
Yeah, it is. It's a tedious. When I say it's a tedious process, that doesn't mean I don't enjoy it. I do, but it's something where either a lot of big banks, they don't know how to do it,
right?
They don't have access to the product, or they just put in a half-assed attempt. Pardon my French, and they I can't help them.
Right.
And I do. I end up, whether these are just clients that come direct referral to me, or they come by referral because they struggle, and then maybe their agent or friend or somebody says, you know what, give Luke a call and see what he can. If he can't do it, nobody really can. And
right.
And it's just a puzzle that we're trying to solve, and it's something where we got to start with looking at tax returns, and then if that doesn't work, then we look at the business if they're self-employed. Heck, you look at other borrowers, you look at if they've got a bunch of assets, if there's just a family, like anything, we just kind of keep going down that path of looking for options to find some source of income or collateral or compensating factor with high assets. Even if you're a foreign national, like there's usually always a way. And it's not something where we're just automatically like, oh, you don't qualify for the top shelf best lowest rate, and then I'm going to transition into a hard money loan. It's not even that. It's more like, if you don't qualify for top shelf 4 or 5%, then maybe we're at 5.5% or 6.5%. It's not a terrible loan. And then most of these people, I get them into it, we close the purchase, and then in a year later, I stay with them, and then I've had a handful that we've refinanced out of that portfolio Alt-A loan product into the top shelf loan a year later, once they got their credit, their job was more stable, a little bit more income, whatever. It's been a good process, and
your strength right now. I have given several people who come to me for loans to you, simply because I know that when talking to borrowers, not only showing them the programs by meticulously drawing it out in emails or however you do it, but you're willing to spend the time on the phone. I think so many of the large banks just don't have the time. They don't, they're in meetings, they're in quotas, they need to slam and bam. They're not there to service, the customer. And I think that's where you, and mortgage brokers in particular, but for you in particular, being able to take the time with people to find out what's going on, explaining to them in writing the different scenarios, and then being able to continue to service them once the loan closes to make sure that they're obviously getting the better rate if they qualified for it, like you said, a year later.
Yeah. No, and I tip my cap to you. You're the one that built the company. Like, it's a great structure. I love it. I thrive off it. It may not be for everyone, but it's
right.
Just what you said. It's quality. It's not quantity. I don't want to be doing 10 loans a month.
Right.
I want to do. I'll do a couple, a handful, and I'm going to be this epically available. Like, it's almost like a personal shopper for the client. Like, you're navigating through all of the red tape and stuff that frustrates anyone that has to go through B of A, Chase, City. They close loans, but my goodness, it's 2.5 months, and it's tedious, and it's terrible, and it's not very fun. And
well, I always recommend to people, look, interview some people. I know you want to get that house. I know you're putting in an offer today, but talk to 2 or 3 people so that you get a feel for how they work, what their ethic is, how they're going to service you, because you get stuck with the wrong person who takes your application. 99% of the time, you're not moving agents in the middle of that. You're just not. So It really makes sense to be able to shop around and find the right person, right?
Absolutely. Yeah, absolutely.
Put on your prognostication hat, Luke. Tell me where we're going to be heading this summer in terms of the rates and real estate prices.
God. Oh, man.
Yeah, exactly. Okay. That was a good answer. That was absolutely perfect.
I just yesterday I was talking, because we're in a rally right now, and it's weird how much, it's not weird, but I don't know, you just don't think they're going to drop back down. I kind of thought they were going to hold the line, and
right.
I love the question. I don't know. Prices, I don't see a drop, and I don't know. Maybe there's a steady 5-ish, not maybe double-digit increase in values, but because of low inventory in these prime markets, naturally, I think stuff's going to drive up. I mean, we are having problems with. You get a lot of people in these cities that will go in and they're going way over ask, and then it kind of becomes a colossal waste of time, because if they're getting financing, then we can't appraise.
Right.
And then it's just like, oh, great, you're paying me $50,000 or $100,000 over ask, but we can't even appraise for it. So there's difficulty kind of sussing out those people that are. It's just you got to be. It's hard as a seller right now. Like, you got to really be careful with picking the right buyer. Not only just making sure they got good backing for their loan officer who can close the financing, but then like coming in with maybe enough down payment when you've got multiple offers, so that you've got a little bit of wiggle room if we don't appraise.
Yeah, and that's interesting that you mentioned the appraisal several times, because I've heard this myself, is that right now we're in a nervous market for Fannie Mae, Freddie Mac, even though some of the restrictions on there are a couple of programs out there that they aren't even calling for appraisals, which I'm like, what? However, I have heard that there are difficulties in getting certain properties in certain areas to appraise for the dollar value of whatever the offer is.
Yeah. And I mean, aside from, I've had 2 of them this year, and both times the buyer was just, they knew they wanted it, they didn't care, and they came in with a difference. That's not always the case. And then especially if you're only coming in with 5% or 10% down, then you don't have that wiggle room. In my case, they were putting 20, 30% down, so they weren't as worried about it.
Right. They had the cash to do it, and then cash always solves problems, right? I mean, you got a problem with an inspector, guess what? We can fix it. Cash solves problems. Don't worry about it. It's so funny. Hey, listen, Luke, we got about 30 seconds left. Can you shout out your phone number, the best way to get in touch with you?
Thanks, Jeff. My you can reach me directly at 818-209-2592, and the email is luke.malibufunding@yahoo.com.
Luke, thanks again. Always great having you on the show. I always have a good time, and I never stress. So thanks very much.
You're very welcome. Thanks as well, Jeff.
Okay, great. I'm Jeff Barton, your voice in the mortgage industry. We'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome, everybody. I'm Jeff Barton, your voice in the mortgage industry. 888-713-2929. Our telephone number here. If you pick up the phone call now or later or at some future date, we will answer questions and be able to be available for you if you need something immediately. A lot of times on the weekends, you know what happens? You want to make an offer on a house and you don't have a pre-approval letter. We could probably help you on that, so save the number if you need a pre-approval letter. Usually those pre-approval letters are very, very important, especially to a listing agent who doesn't know a lot about financing. Yes, there are a bunch of those out there. Most of the veteran agents can tell what a pre-approval letter is versus something that's a pre-qualified letter versus something that is a DU approval. These are all elements of the offer, the purchase offer that you're out there, and each one of those carries with it a certain weight. If you're looking to get it quick done, a pre-qualified letter simply means that based on the information provided, i.e., this is my FICO score, this would be the buyer talking. Hi, I got a great FICO score, okay, and I've been working for 20 years at the same job and I make $100,000 a year. So based on that information, the borrower's name and what have you, perhaps you run a credit report. That's a pre-qual letter, right? There's no verification of all this stuff. It's just based on what the borrower is saying. A pre-approval letter means that, no, you've pulled credit, you've taken a look at the W-2s or at the taxes or at some form of ability to repay, big words that really require somebody to take a look at it and make an analysis, and you've looked at programs. So within the approval, you can say honestly, yes, I'm the loan officer or the loan company or the bank, and I can say based on my verified pieces of information, this borrower is pre-approved. And then language is thrown in there like equivocating, saying this is based on the property, this is based on verification of the documentation provided. But in general, that's much better than a pre-qual letter. A DU approval, now again, people may have difference of opinions. DU, what is that? It's desktop underwriting. If you go to a Freddie Mac product, versus a Fannie Mae product, the Freddie Mac product is LP, Loan Prospector. But these are government websites that you go on, you plug the information in that you've obtained about the borrower, and it kicks back that this particular borrower, based on the information provided, is approved eligible, meaning that that loan, based on that information that you put in, can be purchased by Freddie Mac or Fannie Mae. That's music to any lender's ears, because that simply means that based on the information that they can sell the loan, which is what anybody in the loan business wants to do. Very few people hold on to their loans. Very few people portfolio the loan, which is, of course, when they hold on to it, and then whatever they do with it is not the subject of what we're trying to say. So if you're out there buying right now, these are the three levels of what you need from your loan officer when they start talking to you about can you qualify for a loan. But you need that piece of paper, one of those three things: pre-qual, pre-approved, DU approval. You might want to send a pre-approval letter with the DU findings. Therefore, it isn't necessarily on hiidoloans.com to provide that letter, which nobody knows who that is. I just made that up, which is the point. A lot of loan companies are small, and if you're dealing in various counties, like for instance, you have a friend who owns a mortgage company in San Bernardino, and that friend has just gotten a loan in Los Angeles. Well, the real estate agents in Los Angeles may have no idea who this company is because they're a couple counties away. So it really is important to send the DU findings along with the pre-approval letter if, in fact, that's applicable, and usually it is, because if you're in a market where you have multiple offers and multiple contracts going back and forth between buyers and sellers, you want to make sure you have a leg up, and that's part of what you can get. Now, some companies don't work on the weekends. Some companies don't want to give you the DU findings. And by the way, on all of this information, Social Security number, pertinent information about the borrower, you probably want to redact a lot of that, just because, and that redact means cross it out so you don't have to pass that through. But you'll need your if you're the buyer and you're listening, make sure you give permission to the loan officer that you're working with or the company that you're working with in order to be able to let them give that information out. And usually that is done in writing. Why I say that is it's like when you run your credit, right? And I've had calls from not a lot of borrowers, but probably over the last 5 years, I've probably had 4, 5 calls from borrowers who said, who the heck is your company? My company, the company I work for, is Malibu Funding. They sponsor the show. I'm grateful for them to do that. But and they asked me, who's Malibu Funding? So we have to go through the history of who this person was, who pulled the credit, and where the authorization to pull credit is. When credit is pulled, and it can be authorized up to 2 or 3 days later, but you need something in writing that says, yeah, I gave that person permission to be able to pull my credit, because it's your credit and you should have 100% control over it. For those loan officers that just pull credit on a whim just because you gave them your Social Security number, make sure if you're a buyer out there and you do give your Social Security number to a loan officer, that you get in writing from him a release, or what they call an authorization. And the authorization carries with it the ability to pull your credit and to use that credit in order to try to place a loan. That's incredibly important. But these borrowers that would call me, they have no idea who Malibu Funding is, and so we have to trace back to who pulled it. And, oh, yeah, that was so-and-so's cousin's friend's brother-in-law's son who did that. And they don't. A lot of times they just don't remember giving their authorization, or that the person they're giving the authorization to works for my company or the company who's ever pulling the credit. So these two things in terms of presenting offers are incredibly important, because your credit score, as we've heard throughout the show, really determines your rate, right? And in the real estate purchase contract, and a lot of this doesn't get filled out, but the more you fill it out, the better it is. There's a whole section on the loan and what is in the loan and what kind of rate are you going to get in the negotiations that you're going to have with the seller. If you put down, I'm going to get a 3.5% rate, 30-year fixed with no points, most people are going to say, well, that's impossible. You can't get a 3.5% interest rate right now. So usually sellers like to see that percentage or the interest rate high. Why? Because if you put it at 5%, they pretty much know that you can get a loan, but you don't want to commit because you're a buyer, so you don't want to commit to anything above 4% or, like I said, 3.5%. So there's this understanding in the contract, in the credit score, and in the way you present your pre-approval, pre-qualification, or your DU findings from your financing loan officer or the bank that really is going to help determine for the realtor representing the seller and for the seller who the best offer is. If we're hearing right, and I've heard it 2 or 3 times on today's show alone, real estate is still in multiple offers. You may see some areas, and when we had, maybe it was because it was cold and raining, maybe because a lot of things going on in Southern California, traditionally hot weather in January, just didn't happen this year. So maybe that depressed prices. Well, it's not depressing the prices anymore, as we've seen the year-to-year jump go from 3 to 4% to 5 to 6% in 1 month. And that tells you that prices jumped last month quite a bit. And it also tells you, based on what we're hearing from the 3 guests on the show today, that we have multiple offers on a lot of different properties. So the advantage to you as the buyer going in with the strongest financing, understanding the reason the loan officer needs your credit score, and giving authorization to be able to use that credit score. All of these things are extremely important, and certainly on the weekend when you're out looking at open houses and you want to get that house and you want to make sure that you present the strongest offer and you don't want to wait for Monday morning. Look around and make sure that whoever you're choosing is a loan officer or a loan company or a bank is available on the weekends to provide you with that information. A blanket pre-approval letter is not one that's going to fly with anybody who's got some experience, because they'll look at it right away and see either the price, the amount is wrong, or the date is wrong. And both of these things are red flags to anybody who's got experience. Anyway, I'm Jeff Barton. Thanks for tuning in this week. Really appreciate it. I'm the host here for The Mortgage Voice, and we'll see you next time.
You're listening to The Mortgage Voice with Jeff Barton. For more on today's topic, visit www.malibufunding.net.